Last time we looked at the income statement up to gross profit level. Now today, which is part 2, I want us to continue. We look at the gross profit then and its expenses until we arrive at the net profit. So like what I said earlier on, as an entrepreneur, this is what you must know: how to ascertain the net profit, how to ascertain the net loss, because sometimes you might think the organization, your business is doing well, is making profit, and yet in actual sense, it is not making any profit. Okay, it is making loss. So unless you come up with this that we are doing, is when you understand whether your institution, your company, or your undertaking is making a profit or not. So last time we discussed, we ended on gross profit. So we are going to continue from gross profit. We look at now the profit and loss account, which includes all the expenses that your undertaking has incurred or has incurred during the period. So after gross profit, we go to less expenses. So here you write less expenses. You can even underline. So the expenses that we are talking about here, we are looking at transport for the period. Transport, okay? This figure comes direct. If at all it has no adjustments, it will come here, okay? Then we also look at rent. If at all you are renting a building where you are doing your business, so rent comes there. Now, in this case, this rent has an adjustment, so it will come here. The rental amount comes there. Okay? Let's say the adjustment is that you paid rent in advance. Okay? You paid rent in advance. For instance, you are supposed to pay 1,000 kwacha, but you paid 2,000. Okay, so which means the other 1,000 you have paid in advance. So you say, because you have paid in advance, you say less rental prepayment. Rent prepaid. Okay. This, you are supposed to subtract it because you paid in advance. So the figure that you get comes there. The other expense is electricity. And let us take it that electricity is you still have outstanding. Okay? So it will come here because it has an adjustment that you need to make. The figure comes there. So it's owing, it's outstanding. So you say add outstanding or rental outstanding. Electricity outstanding, not rent. Add electricity owing, it comes there. You add the figure that you get after adding, comes there. Okay? Then you have drawings for the period, in case you got goods for personal use at home. So, drawings. This figure goes direct there. Okay? Then you have also water bills, okay, for the office or your business. Water bills. The figure has no adjustments, it comes there. Okay, then you have wages and salaries. The figure comes there, it has no adjustments. Okay, you have telephone bills. Now let's say the telephone bills, here you have outstanding. Okay, you have the other bills that you have not yet paid. So telephone bills, because it has adjustments, it comes here. Okay. Then you say add telephone bills outstanding. Telephone bills outstanding or owing. Okay. You add these two. The figure comes there. The next one is discount allowed. You sold the goods. When you sold the goods, then you allowed the discount. Instead of selling at the original price, but you reduced. So which means you gave away a discount. That is an expense to the organization. So discount allowed. It comes there. Okay. The next one is carriage outwards. Let's say a customer came and bought the goods from your shop. Bought the furniture from your shop, from the tables from your shop, or tomatoes from your shop. Okay, as an entrepreneur, or metal or grilled doors from your shop. Then you provided transport, which is carriage outwards. So it is an expense. It also comes there. Okay. Then the other list, the other expense, automatically every business has an office. You need to buy the plain papers, reams of plain papers, you buy this, you buy specifically for the office. So office stationery, let me put it in that way. Okay, the figure comes there. So these are the expenses that we have. So what you are going to do, you add them. Okay, so we are going to add this plus this plus this plus this plus this plus this plus this and this one. The total that you get here comes at the end, at the far end here. Okay, so this total is called the total expenses. So the total expenses must be subtracted from the gross profit here on top. Okay, so we are going to subtract from there. Why? We want to see whether for this period, for this accounting period, you made a loss or a profit. So when you subtract the total expenses from the gross profit, if the answer will be positive, then you have made a profit. But if the answer is negative, then you have made a loss. What do I mean by negative? If the expenses figure is bigger than the gross profit, then that is a negative. okay, which is a net loss. But if the answer that you get after subtracting expenses from the gross profit, the answer that you get, if at all is bigger than the total for the expenses, then it means you have made a profit. So when we subtract, our answer will be there. So if at all it is bigger, then this will be called net profit. Net profit or loss. So it can be net profit or net loss, depending on the figure that you get. If the answer is bigger, after subtracting it is bigger, then it is a profit. If at all it is less, then it is a loss. So this account, previously, it used to be called the profit and loss account. Nowadays, it is part of the income statement. So this part and the area part that we covered last week have now been put together and is called income statement. See you in the next video.